building a patio. A lumber company delivers bricks on July 1st, and work begins that same day. Work is completed on August 15th. The contractors paid for labor and materials on September 1st. 10 days later, the contractor goes bankrupt without paying the lumber company. The lumber company records a mechanic's lien on the property as of September 4th. The mechanic's lien is effective as of Alpha July 1st. July 1st. July 1st. So why is this? It's because whenever the contractor starts work, that's when the lien is effective. So since the lien is retroactive to the start date of work or material delivery, that's when they can file the lien. That's when it would be effective. So again, a contractor is building a patio. A lumber company delivers bricks on July 1st, and work begins on that same day. Right away, you should notate that because the mechanic's lien is retroactive, it would start on the day that work begins. So July 1st. Contractors building a patio. A lumber company delivers bricks on July 1st, and work begins that same day. Yada yada yada. The mechanic's lien is effective when? It's going to be on July 1st because it takes place on when the work began. When a broker acting as a property manager receives monies, the funds must be deposited within how many banking days? 3. Answer is Charlie. 3. The broker has 3 banking days approximately to deposit trust funds into a trust account. Right. So you got 3 banking days. So standard banking day requirement in many states. Real estate and property management regulations require brokers to deposit and receive funds such as rents or security deposits into a trust account within a specified number of banking days. In this case, the regulation specifies 3 banking days. So when a broker acting as a property manager receives money, the funds must be deposited within how many banking days? Well, since the regulation mandates a deposit within 3 banking days. According to Statute 32-2174, property management accounts, trust accounts. An apartment complex has 10 units. 6 units rent for $650 per month, and 4 units rent for $475 per month. Over the year, there's a 10% fallout, and the property manager receives an additional $175 for every single new unit rented. If 4 units were rented and the manager receives a 5% commission on rents collected, what is the manager owed? Bravo, 3832. 3832. So to complete the calculations, they tell you that there's 6 units for $650, and you need to multiply by 12 months to put in years. Then 4 units for $475 per month, multiply by 12 months to put in years, or put in annual. And then the total, and then add those two together, so you get $69,000. And you want to account for the 10% fallout rate. So take that times 90%, right? Not the 10%, but 100 minus the 10, which you get 90%. That's the fallout. You get $62,640. So that's the total rent accounted for with the fallout rate. So then you want to calculate the manager's 5% commission on collected rent. So $62,640 times 5% gets you $31,32. And then the manager also receives an additional $175 for every new unit rented. We said there was 4 new units rented. 4 times 175 is 700. Add that to the 31,32, so you get 38,32. So that is the total money owed to the manager. Okay, an apartment complex has 10 units. 6 units rent for $650 per month. 4 units rent for $475 per month. Over the year, there's a 10% fallout rate, and the property manager receives an additional $175 for every new unit rented. If 4 new units were rented and the manager receives a 5% commission on rents collected, what is the manager owed? The B, 3832. So again, right away, you want to calculate the total rent. So there was 10 units, right? Total 6 went for 650. You multiply that by 12, and then you get the 4 units. 4 times 475 by 12. Add that together to get the total annual. And then with that number, you also multiply that by 90%, right, to get the fallout rate. Okay, and then the manager gets an additional 175 for every new unit rented, and there's 4 units rented, so 4 times the 175. Okay, and then you add that to your 5% on the top of the 62,640. So now you get 3132 plus your $700 gets you 3832. Which sections are contiguous to section 6? So contiguous means adjacent. So if we look at the definition, contiguous means sharing a border or touching or next to, right, adjacent. So what shares the same border in this township? So if you look from right to left, it's 1, 2, 3, 4, 5, 6. So 1 shares that same border, it's contiguous. And then as you go down, 6, 7, 18, 19, 30, 31. So if you look at the answers, what's contiguous to section 6? Obviously 1 is in there. So the other one, and then 1 and 7. 1 and 7. So what is contiguous to section 6? 1 and 7. 1 and 7. So 1, as you can see, shares the same border on the top right as 6. And then 7 is right below the 6, and that shares the same border there too. So it shares a common border. And this is a township. A township is 6 mile by 6 mile. That's 36 square miles. And it's divided into 36 sections. Each section is 1 mile. Okay. So a township is divided into tiny little sections. Each little section is a mile. A township is 6 miles by 6 miles, making up 36 square miles. All right, so which sections are contiguous to section 6? Well, you have to look at the township and how a township is laid out. So it's a little different. It goes from right to left, 1, 2, 3, 4, 5, 6, and then it'll go down. 7, it'll go in a snake pattern, 1 to 6, then drop down to 7, 8, 9, 10, 11, 12, drop down to 13, go over to 18, drop down to 19, 24, drop down to 25, 30, drop down to 31, all the way to 36. So if I was asked what's contiguous for 1, it could be 2 through 6 or 12 to 36. A broker sold the southwest 1/4 of the southwest 1/4 of the southwest 1/4 and the west 1/4 of the northwest 1/4 of section 26. Township 4, range 3 east. How many acres are included in the sale? Okay, so here we have to know that there's 640 acres in 1 square mile or in 1 section. So take 640, and then we're going to divide it by 4 3 times. Then we're also going to add that to 640 divided by 2 divided by 4. So there's 2 additions. So like we said, 640 divided by 4 divided by 4 divided by 4. 640 divided by 4 3 times is 10 acres. And then take 640 divided by 2 and divided by 4. And you get down to 80 acres. 80 acres plus the 10 is each 90 acres. Answer is delta. So it's 90 acres. 90 acres. All right, so a broker sold the southwest 1/4, the southwest 1/4, the southwest 1/4, and the west half of the northwest 1/4 of Section 26, Township 4, Range 3 East. How many acres are included? So right away, you want to take 640, right? So understanding land division, the standard section of land is a square mile count containing 640 acres. Sections are further divided into quarters, quarters, etc. So take 640 divided by 3, divided by 4 3 times, so you get 10 acres. Add that to 640 divided by 2 and divided by 4, you get 80, so you get 90 acres. How many acres are contained in the following land description? So the northeast 1/4 of the southeast 1/4, so that would be right there alone, one number. And so you can add it to the next one. 640 divided by 2, 640 divided by 4 divided by 4. Okay, so let's do the math. So the first 640 divided by these two, 640 divided by 4 is 160. Then you divide it by 4 again, and you get 40 acres. Now we're going to take 40 acres, we're going to add it to 640 divided by 2 divided by 4 divided by 4. 4, 4, 2, you get 160, the 40, and 20. So you take 20 acres plus the 40 acres, you get what? You get, adding both parts, you get 60 acres. All right, so pretty straightforward. Every time you see a number, you take 640 divided by those quarters. Once you have the and, that means you add it to an additional 640 divided by the quarter numbers. How far from the baseline is Township 4 north, Range 2 east? Okay, so we know Township is how many square miles? It's 6 miles by 6 miles. That's 36 square miles. So 6 times 2 should be 12. So it should be delta. Actually, let's see what the answer says. So in the public land survey system, a township is a square that measures 6 miles on each side, or 6 miles by 6 miles. Townships are numbered in tiers, north or south of a baseline. So you have that snake pattern, right? 1 to 6, then drops down to 7. Then 7, 8, 9, 10, 11, 12, drops down to 13, sneaks over to 18, drops down to 19, sneaks over, until you get to 36. So when they say the township is described as 4 north, meaning it is in the 4th tier north of the baseline. So 4 times 6 is 24. So if you want to calculate the distance, each tier represents 6 miles. Therefore, for Township 4 North is 6 times 4 is 24 miles. All right. So Township 4 North is 18 to 24 miles from the baseline, which corresponds to answer choice delta. So how far from the baseline is Township 4 North? 4 North, Range 2 East. So take 6 times 4, you'll get between 18 to 24 miles. So how far from the baseline is Township 4 North, Range 2 East? 18 to 24 miles. How many acres are contained in the following description? Northeast 1/4 of the south of the northwest 1/4, and south 1/2 of the northwest 1/4 of the northeast 1/4, and the northwest 1/4 of the southwest 1/4. So we're going to take 640 divided by 4, add that to 640 divided by 2 divided by 4, divided by 4, then take 640 divided by 4 and divided by 4. So here we go. 3 parts here. So the first one is the 640 divided by 4 and 4. Okay, you get the 40 acres, and then you take the 640 divided by 2 and 4. Okay, and you get 20 acres, right? Kind of like how we did the last problem. It was divided by what was that? 4 and 2. Yep, to get 20. So similar to this, you get the 40 and the 20. And then the last part is the 640 divided by 4 and divided by 4. Again, to get another 40 acres. So anytime you take 640 divided by 4 and 4, you get the 40. So 40 plus 20 plus 40, that's 100 acres total. 100 acres total. So answer is bravo. 100 acres are contained in the following description. 100 acres. Acres. So again, how many acres are contained in the following description? Northeast 1/4 of the northwest 1/4. Take that, add that up, and then add 640 divided by 2 divided by 4 and divided by 4. Take that number, add it up, and 640 divided by 4 divided by 4 of that, you get 100 acres. How many acres are in the following proper description? From the northeast corner of section 20, head 660 feet east, then 660 feet south, then 660 feet west, and then 660 feet north. Right, so you got a full square. You want to get the area. Area's length times width. So take 660 feet times 660 feet. You get a number. Right. So let's get the area of a square, side times side. 660 times 660 is 43,560 square feet. Okay, you want to convert the square feet to acres. So how many square feet are an acre? It's 43,560. So take how many acres are in the following property description. So you have that area, right? And now you want to get the acres. So 43,560. That's the number, or 435,600. That's how much area is in that particular description, and then you divide it by 43,560 to get the total number of acres, and it comes out to 10 acres. So how many acres are in the following property description? 10 acres. 10 acres. How many townships are in a parcel 24 miles square? So we know a township is 36 square miles. So the answer is 16, Charlie. 16. So we're going to calculate the area of a parcel. A parcel is 24 miles by 24 miles, has an area of 576 square miles. They gave us that in the problem is 24 miles square. So 24 by 24, that's 24 miles square. 24 by 24 is 576 square miles. Calculate the area of each township. Each township covers an area 6 by 6. So just take your 576 and divide it by 36, and you get 16. That is 16 townships. Right, so how many townships are in a parcel 24 miles square? First, right away, take 24 times 24. You get a number. Take that number divided by the 36 square miles, and that'll calculate how many number of townships are in that are in a parcel 24 miles square. How far from the principal meridian is Township 4 north, Range 2 east? So on this one, you're going to take Range 2 east, means the township is 2 6-mile units east of the principal meridian. So here it's a distance calculation. Township is a 6 mile by 6 mile, and they give you range 2 east. So 2 miles times the 6 gives you 12 miles east of the principal meridian. Right, so you're between 6 to 12 miles. Bravo, 6 to 12 miles. 6 to 12 miles. All the following sections are considered standard except Charlie 18. 18. 18. So 18 is not considered a standard section. So not all sections are exactly 640 acres due to irregularities in the land or survey adjustments. Sections located along the north and west edges of a township, which are sections 1 through 7, 18, 19, 30, and 31, are called fractional sections and may be slightly smaller or irregular in shape because they accommodate corrections for the curvature of the earth. So it is Charlie 18. When analyzing the financial statement of a company using current ratio and asset test ratio, what would you expect the satisfactory minimum to be on the quick or asset test ratio? Answer is delta 1 to 1. 1 to 1. 1 to 1. So the asset test ratio is going to be the current assets minus inventory divided by the current liabilities. So a minimum satisfactory level for the asset test ratio is typically 1 to 1. Right. So when analyzing the financial statements of a company using the current ratio and asset test ratio, what would you expect the satisfactory minimum to be on the quick or asset test ratio? It's 1 to 1. 3 people invested $40,000 in a property. They later sued the broker, and eventually the recovery fund paid the investors. The maximum amount the investors could receive is $30,000. $30,000. $30,000. So, recovery fund payouts. So they typically recovery funds have a maximum payout per individual or per claim. So it's often around $10,000 per person or $30,000 per transaction. Here it's one transaction, so it's $30,000. A landlord has a residential lease for $600 per month rent. In addition to the first and last month's rent, how much can the landlord take as security deposit? $300. $300. So the $600 is the rent. You can take up to half of that. In some situations, you can take 1.5. So answer is going to be $300. And the tax rate is $44 per $1,000 of assessed value. What are the annual taxes for an owner over 59 years old? Is Alpha $572. Annual taxes are $572. So you're given 90,000 as the house value. So we want to calculate the assessed value of the house. So the assessed value is 20% of the total house value. So we take $90,000 times 20%. That's our assessed value ratio. $90,000 times 20%, that's $18,000. 9 times 2 is 18. Now you want to apply the senior citizen discount deduction. So you're going to subtract $5,000 from the assessed value. So 18,000 minus the 5,000 gives you 13,000. Then you want to calculate the tax base on the net assessed value. The tax rate is going to be $44 per $1,000 of assessed value. First, find how many units of the $1,000 are in the net assessed value. So multiply by 44 and divide it by 1,000. So take the 13,000 times 44 divided by 100, and then you'll get 572. And then the annual property tax for an owner over 59 years old is 572. All right, again, a municipality allows citizens over age of 59 a $5,000 deduction on assessed valuation. If a house is valued at $90,000, has an assessed value ratio of 20%, and the tax rate is $44 per thousand of assessed value, what are the annual taxes for an owner over 59 years old? All right, so first things first, right away, figure out the value. So $90,000. What's the value ratio? 20%. So 90,000 times 20% is what? 9 times 2 is 18, so that's $18,000. Then they have a deduction of 5,000, so 18,000 minus the deduction of $5,000 gives you $13,000. Then take $13,000 times the $44 per divided by 1,000, and then you get 572. So here's a clear explanation for calculating the property tax. Right, this is property taxes for a homeowner over 59 years old. So again, the 90 times 20% minus the deduction, and then you multiply by the tax based on the net assessed value to get the 572. A municipality allows citizens over age 59 a $5,000 deduction on assessed valuation. If a house is valued at $90,000, has an assessed value ratio of 20%, and the tax rate is $44 per $1,000 of assessed value. What are the annual taxes for an owner over 59 years old? So again, $90,000 multiplied by the 20% gives you 18,000 minus your deduction multiplied by the 44 per divided by 1,000, and there's your annual taxes for the owner. An investor owns a 36-acre parcel and wants to develop it with lots of minimum size of 2.5 acres. What is the maximum amount of lots the investor can develop without creating a subdivision? It is 5. 5 lots the investor can develop without creating a subdivision. So for this one, you want to find the maximum number of lots that can be developed. So divide the total land area by the minimum size per lot. So you have, so this investor owns 36 acres, and you divide it by 2.5 acres per lot. 36 divided by 2.5 gives you about 14 and a half. Since the question asks for a maximum number of lots without creating a subdivision, and subdivisions typically begin at 6 or more lots, the maximum allowable lots without a subdivision would be 5, right? So 6 or more, you need a subdivision. 5 or less, you don't need a subdivision. Subdivision or subdivided land, according to ARS, Arizona Revised Statute 32-21101, gives you the definition. But it means improved or unimproved land or lands divided or proposed to be divided for the purpose of sale or lease, whether immediate or future, and 6 or more lots, parcels or fractional interest. That's what subdivision means. When you got 6 or more, you can have subdivided land. An investor owns a 36-acre parcel and wants to develop it with lots of minimum size of 2.5 acres. What's the maximum amount of lots the investor can develop without creating a subdivision? All right, so right away, how many lots does he have? 36. He wants lots of a minimum of 2.5. So 36 divided by 2.5 is about 14. The maximum, and he does not, without creating a subdivision, you don't even need to do the math here really. I mean, the number of maximum lots you can create without creating a subdivision is 5 or less. If you have 6, you have to create a subdivision. So investor owns a 36-acre parcel and wants to develop it with lots of minimum size of 2.5 acres. What is the maximum amount of lots the investor can develop without creating a subdivision? So here you take 36 divided by 2.5, you get 14. 6 or more, you have to create a subdivision, and so it's going to be 5 according to law. Once you have 6, typically without creating subdivision, once you have 6 lots, you have to create a subdivision. So the maximum is going to be 5. P paid $125,500 for a parcel of land in a section. Right, section's 1 mile at $18,000 per acre. What percentage of the same section does P own? 1%. 1%. What percentage of the same section does P own? 1%. All right, so to determine what percentage of the land section P owns, we can follow these steps. So calculate the acreage purchased by P. So P paid $125,500, and the land cost is $18,000 per acre. Acreage purchased equals the total amount paid divided by the price per acre. So acreage purchase is going to be $125,500 divided by $18,000 per acre, leaving you with acres, right? So the dollars divided by dollars per acre leaves you with acres. So $125,000, 500 divided by $18,000 is 6.97 acres, right? That's how much acreage that was bought, right? Acreage purchased. So again, P paid $125,500 for a parcel of land in a section at $18,000 per acre. So if you want to know how many acres there are, $125,500 divided by $18,000 per acre. Acres are the final units, right? So you got about 6.97 acres. Now calculate the total acreage in a section. A section in land measurement typically refers to an area of 540 or 640 acres, right? 1 mile is one section, which is 640 acres. So 1 mile, the township is 6 mile by 6 mile, that's 36 square miles. That township is broken into little tiny sections. Each section is 1 square mile, a mile by 1 mile by 1 mile. 1 mile is one section, and then in that 1 mile, there's 640 acres. So to determine the percentage of the section P owns, percentage owned is going to be the acreage purchased. So he bought 6.97 acres, and then you divide it by the total. The part divided by the total. Part is 6.97 acres divided by the total of 640 acres times 100. That's 1.1%. So since the close answer is 1%, you round down to 1%. So P owns approximately 1% of land. Okay, so P paid $125,500 for a parcel of land in a section at $18,000 per acre. What percentage of the same section does P own? So again, right away, let's calculate the acres that he bought. So 125,000 divided by 18,000 per acre. That's going to give you the number of acres, about 6. And then in 1 square mile, there's 640 acres. So we'll take the part divided by the total to get the percentage, and that comes out to be 1%. 6 divided by 640 is about 1. So your answer is about 1%. So acres purchased, 125,500 divided by the 18,000 per acre, leave you about 6 acres. 6 acres divided by the 640 acres right? What's the total amount of acres within one section? It's about 1%. P paid $125,500 for a parcel of land in a section at $18,000 per acre. What percentage of the same section does P own? So right away, calculate one, the number of acres. Once you have the number of acres divided by the total number of acres within that section to get the percentage. So 125,500 divided by the 18,000 per acre gives you about 6 acres. 6 acres divided by total number of acres. Total number of acres 640. 6 divided by 640, about 1%. E has 174,240 square foot parcel that she intends to sell for $1,500 per acre. How much would E receive if she sold 2/5 of the parcel? 2,400. E would receive if she sold 2/5 of the parcel, 2,400. 2,400. All right, so if we'll again calculate the total number of acres. So they have 174,240 square foot. Now, how many square foot is in 1 acre? 43,560. 43,560. 43,560. 1 acre is 43,560 square feet. 1 acre is 43,560 square feet. 1 acre is 43,560 square feet. 1 acre is 43,560. So take 174,240 divided by 43,560, and then you get 4 acres. Okay. She bought it for the 4 acres. She received 2/5 of it. So 4 acres, that's the total amount, times 2/5, about 1.6 acres. 1.6 acres. She bought it for $1,500 per acre. 1.6 acres multiplied by $1,500 per acre to give you just dollars. So it's about $2,400 for the amount of the 1.6 acres. All right, E has 174,240 square foot parcel that she intends to sell for $1,500 per acre. How much would E receive if she sold just 2/5 of the parcel? So again, right away, figure out how much square footage they have, multiplied by the 2/5 to get that parcel amount, and then multiply by 1,500 per acre. So 174,240 divided by 43,560. 43,560 is the amount of square footage in an acre. 1 acre is 43,560 square feet. So 174 divided by 174,240 divided by the 43,560. That's going to give you about 4 acres. Multiplied by 2/5, about 1.5 acres. Multiplied by 1,500 gives you about $2,400. So E has a 174,240 square foot parcel that she intends to sell for $1,500 per acre. How much would E receive if she sold 2/5 of the parcel? Again, you want to calculate the number of square footage. Right, convert it to acres, and then from acres multiply by the amount of money to get the amount of money you will receive. So 174,000 divided by 240 square foot divided by 43,560 square foot per acre, leaving you with acres, and then you have 2/5 of that, and then you multiply by 1,500 to get the 2,400. How far from the principal meridian is Township 5 North, Range 3 West? So Bravo, 12 to 18 miles. 12 to 18 miles. 12 to 18 miles. So again, you have to remember a township is 6 miles by 6 miles, making it 36 square miles in a township. Township is composed of tiny sections. Sections are 1 square mile. In a square mile, it's 640 acres in a square mile, which is in a section. So here, since we are at Range 3 West, right? They say Range 3 West. This location is 3 ranges west of the principal meridian. Multiply the number of ranges by 6 miles. So 3 times 6 is 18 miles. So location is between 12 and 18 miles from the principal meridian. So how far from the principal meridian is Township 5 North, Range 3 West? So again, you're going to notate that a township is a 6 mile by 6 mile, 36 square miles. So 6 times 3, that's 18 square miles, 18 miles from the township, from the principal meridian. So to calculate distance from the principal meridian for Township 5 North, Range 3 West, follow these steps. So each township and range represents a 6 mile by 6 mile square. So each unit moves the location 6 miles farther from the reference line, the principal meridian for ranges. So how far from the principal meridian is Township 5 North, Range 3 West? 6 times 3 is 18, so about 12 to 18 miles. A 10-unit apartment building is sold. Security deposits total $1,000 and paid rent for the month totals $8,000. If closing occurs on the 15th of the month, what is the credit due to the buyer? Assume the buyer is credited for the day of closing. So for here, the credit due to the buyer is going to be $5,000. 5267. 5267. So here, let's break it down. The buyer receives a credit for the security deposit, which totals $1,000. So we need to calculate the prorated rent. The monthly rent for all units is $8,000. So the closing occurs on the 15th. So the buyer will own the property for the remaining 16 days of the month, assuming a 30-day month. So calculate the daily rent. It's $8,000 divided by 30 to get you the daily rent. Yeah, I was going to say $8,000 is a lot of money for one unit. It's all the units. So $8,000 divided by 30 is $266. That's the daily rent. Times 16 by the number of days the buyer will own the property. So that's 4,266. You add the $1,000 security deposit to get the total is 5,266.67. So round to the nearest dollar. The credit due to the buyer is going to be $5,267. A 10-unit apartment building is sold. Security deposits total $1,000 and paid rent for the months total $8,000. So that security deposit needs to go to the buyer, right? The buyer's buying it, so he needs to hold the security deposits. So if closing occurs on the 15th of the month, right, and that day of closing is going to assume the buyer's credit the day of closing, right? That's 16 days. So, the 15th day, if you count 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, that's actually 16 days. Okay. All right, so the rent is 8,000 divided by 30 to get in days, $8,000 per month divided by 30 days per month. And then you multiply by 16 days. That's $4,000. Add the 1,000. So the credit to the buyer is $5,000. All right, a 10-unit apartment building is sold. Security deposits total $1,000, and paid rent for the month totals $8,000. If closing occurs on the 15th of the month, what is the credit due to the buyer? So assume the buyer's credit for the day of closing. So right away, from the 15th to the 30th, that's 16 days. So what you want to do is take $8,000 in paid rent divided by 30 to get the dollars in days. You get a number, take that number, multiply by 16 days, and then you add 1,000. All right, if the property is described as the north 1/2 of the southeast 1/4 of a section and is offered for $325 per acre, what is the listing price? So it's going to be $26,000. $26,000 listing price. All right, so again, we know that how many acres are in a section? 640 acres are in one section, which is a square mile, 1 mile. So let's take 640 divided by 2 divided by 4. 640 divided by 4 is 160. 640 divided by 2 is 80. And then you take the 80 acres times the $325 per acre to give you in just acres. So acres divided by acres per dollars leaves you with dollars. So it's $26,000. All right, if a property is described as the north 1/2 of the southeast 1/4 of a section and is offered for $325 per acre, what is the listing price? So 640 divided by 2 divided by 4 gives you about 80 acres. 80 acres times $325 per acre, leaving you with dollars. So 80 times the 325, it's about 26,000. All right, if the property is described as the north 1/2 of the southeast 1/4 of a section and is offered for $325 per acre, what's the listing price? So to calculate the listing price, take 640 divided by 2 divided by 4, you get a number. Take that number, multiply by the $325 per acre, and then you get the 26,000. A property that produces $3,000 in net income per year was valued using a capitalization rate of 7.5%. Its value is $40,000. $40,000. $40,000. So here, straight up, property value is equal to what? Is the net income divided by the cap rate. Property value is the net income divided by the cap rate. Value is the income divided by the cap rate. Value is the income divided by the cap rate. So what's the income? $3,000. What's the cap rate? 7.5%, or 0.075. So 3,000 divided by 0.075 is 40,000. That's the value. All right, a property that produces $3,000 net income per year was valued using a cap rate of 7.5%. Its value is so right away, property value is the net income divided by the cap rate. Do you have the income? Yes. Do you have the cap rate? Yes. So you got 2 out of 3 variables. So the value is 3,000 divided by 0.005, give you the $40,000 value. So property value is $3,000, income divided by cap rate. A property that produces $3,000 in net income per year was valued using a capitalization rate of 7.5%. Its value is, so to calculate property value, it's the net income divided by the capitalization rate. So your net income is $3,000 and you divide it by your 7.5%, 0.075, and you get $40,000. A month-to-month lease requires a tenant to pay the rent on the first of each month. On March 15th, the landlord notifies the tenant that the lease will be terminated. On which date will the tenant need to vacate? April 30th. April 30th. April 30th. So, we look at this. Month-to-month leases typically require a full month's notice for termination. Month-to-month leases typically require a full month's notice for termination. So, since notice was given on March 15th, tenant has until the end of April to vacate. Right? So on March 15th, you got tired of your tenant, you gave him a notice to vacate. So does he have the end of March? No, he has a full month notice. So end of April, right? Next month, he needs full 30 days. So even if you notified him on March 2nd, right? Even if you notified him on March 1st, right? Still short 1 day, still be April 30th. All right, month-to-month lease requires the tenant to pay the rent on the first of each month. On March 15th, the landlord notifies the tenant that the lease will be terminated. On which date will the tenant need to vacate? All right, so again, you need to give notice. Month-to-month requires a full month notice. So March, any day in March, you need facing a $400,000 loan. The borrower will not be charged an origination fee on the first $50,000, but will pay $4.20 for each $1,000 of loan amount over $50,000. The origination fee will be $1,470. So here you want to calculate the loan amount subject to the fee. So here, $400,000 minus the $50,000, that's the fee, is $350,000. And then you multiply by the 4.2 and divide by the 1,000. And you get $1,470. The lender is placing a $400,000 loan. The borrower will not be charged an origination fee on the first $50,000, but will pay $4.20 for each $1,000 of loan amount over $50,000. Okay, origination fee will be what? So they give you the loan $400,000. You're not paying on the first 50, so subtract the 50. You got $350. 350 divided by 1,000. and multiply by 4.2, and you get 1470. So 400 minus the 50 gives you 350. 350 divided by 1,000, you get the 350. 350 times the 4.2 is give you 1470. That's your origination fee, $1,470. A lender is placing a $400,000 loan. The borrower will not be charged an origination fee on the first $50,000, but will pay $4.20 for each $1,000 of loan amount over $50,000. The origination fee will be so right away you're not charged on the 50 grand. So the loan is 400 grand minus 50 grand, that gives you 350 grand. Divided by 1,000, multiply by 4.2, and that gives you 1470. A tenant vacates a property having done $1,250 worth of damage. The tenant also left an Xbox valued at $250 on the property. The tenant contacts the property manager within 10 days and demands the return of the Xbox and the $1,000 security deposit. The manager, Alpha, must return the Xbox, but may keep the $1,000 security deposit. Must return the Xbox, but may keep the $1,000 security deposit. Must return the Xbox, right? Because you can't keep personal property, but you can keep the security deposit. So the property manager should return the Xbox to the tenant, but you can keep the $1,000 security deposit. So a tenant vacates a property having done $1,250 worth of damage. The tenant also left an Xbox valued at $250 on the property. The tenant contacts the property manager within 10 days and demands the return of the Xbox and the $1,000 security deposit. The manager should what? So they did $1,250 worth of damage. So, and they have it secured by $1,000. So, right, and then you got $250 worth left of damage. Who can you use that Xbox? No, because it's personal property. You know, even though you want to go sell it and get your money back, but you can't. A buyer pays $175,000 for an office building with $25,000 as a down payment. Over 6 years, the buyers pay $12,000 on the mortgage, of which 50% is interest. Disregarding interest, what percentage of the purchase price has the buyer paid? 18%. 18%. 18%. So calculate total amount paid toward principal. 50% of the $12,000 mortgage payment is applied to. So the principal, $12,000 times 50%, that's $6,000. Down payment principal. So take your down payment of $25,000 plus the $6,000, it's $31,000. And for percentage, you take the part divided by the total. So what's the part? 31,000. What's the total? 175,000. 31,000 divided by 175,000 gives you 18%. So a buyer pays 175,000 for an office building, right? That's the total amount he paid, and 25,000 as down payment. So that money went out. Over the 6 years, the buyers Over the 6 years, the buyer pays $12,000 on the mortgage, of which 50% is interest. Disregarding interest, what percentage of the purchase price has the buyer paid? So take your $12,000, which is the amount they paid over 6 years, times 50%. That's $6,000. Add the down payment that's of the $25,000. That's $31,000. Take $31,000 divided by $175,000, and you get 18%. So they've paid about 18% so far of the purchase price, right? So all right, buyer pays $175,000 for an office building with $25,000 down payment. Over 6 years, the buyers pay $12,000 on the mortgage, of which 50% is interest. Disregarding interest, what percentage of the purchase price has the buyer paid? So right away, take $12,000 times 50%, that's $6,000. Add that to the 25 grand, it's 31 grand. Take that divided by the total, you get 18%. That's the total amount they've paid per unit. Rents for $350. Rent is collected on the first of each month. The duplex sells and closes on September 23rd. What is the prorated income the buyer receives? $180. $180. $180. So take the rent divided by 30, right? So the total rent. But first, let's calculate the total monthly income. So one unit is $325. The second unit is $350. Add those together, you get $675. $675 divided by 30 days, you get, so that's the dollars per month. And you want to convert, there's 30 days in 1 month, leaving you with the daily rent. So it's $22.50 per day. The sale closes on September 23rd. So the buyer owns the property from the 23rd to the end of the month. So there's 30 days. So 23, 24, 25, 26, 27, 28, 29, 30. That's 8 days. It's not 7. It's not 7 days. You count the 23rd as a full day. So you start on 23rd, so 23rd, 24, 25, 26, 27, 28, 29, 30. That's 8 days. So if to help you remember, 30 minus the 23 is 7 plus the 23rd day is going to be 8 days. So $22.50 times 8 is going to be $180. So the monthly income on one unit in a duplex is $325, and the other unit rents for $350. Rent is collected on the first of each month. The duplex sells and closes on September 23rd. What is the prorated income the buyer receives? So take 325, add it to the 350, you get 675 per month divided by 30 days to get the daily rent. The buyer takes hold of it on September 23rd. There's 30 days in September. 30 minus 23 is 7, plus the 23rd, that's 8 days. So you take that 8 days, multiply the number you got, and that's the prorated income the buyer receives. The monthly income on one unit in a duplex is $325, and the other unit rents for $350. Rent is collected on the first of each month. The duplex sells and closes on September 23rd. What is the prorated income the buyer receives? So first, add up all the income, put it in days, multiply by the number of days the buyer's going to have it, and that's the income the buyer receives. All right, a piece of property sells for $125 an acre, and the sales price is $185,000. What is the size of the property? 1480 acres. 1480 acres. 1,480 acres. Almost like 2 square miles. 1 square mile is how many acres? 640. So, identify the information given. So you want to calculate the acres. So take the total sales price and you divide it by the price per acre. So what's the total sales price? I told you it was $185,000 and the price per acre is $125 per acre. So dollars divided by dollars per acre, leaving you with acres on top. So $185,000 divided by $125 gives you 1,480 acres. That's the acreage, right? 1,480 acres. A piece of property sells for $125 an acre, and the sales price is $185,000. What is the size of the property? So $185,000, and then you divide it by $125 per acre, leaving you with acres. So big number divided by the small number gives you number the acres. So 185,000 divided by 125 is 1480. 1,480 acres is the size of the property, given that the price sold was $185,000 and it sold for $125 an acre. All right, so you can calculate how big the size of the property is, knowing the amount it sold for and knowing the price per acre. Long-term capital gain treatment applies if the property has been held more than 12 months. 12 months. 12 months. It's long-term capital gain treatment. So in the United States, IRS defines capital gain as long-term if an asset is held for more than 12 months, 1 year, before it is sold. So if you hold an asset, a house, a car, asset for more than 1 year, more than 12 months, it's capital gain tax, right? So long-term capital gains are typically taxed at a lower rate than short-term gains. So long-term gains, higher tax. Short-term gains, less than a year, and it's lower tax, which are for assets held for a year or less. So if a property has been held for more than 12 months, it qualifies for long-term capital gains treatment. Long-term capital gain treatment applies if the property has been held more than 12 months. A 2-story building measures 24 feet by 30 feet and has 8-foot ceilings. What is the square footage of the building? 1440. 1440. 1440. So you calculate the square footage of one floor, multiply it by 2 to get 2 floors, right? So you get the one floor is 24 by 30, you get 720 square feet, and there's 2 floors. If there was 3 floors, you'd be 3 floors. If there was 4 floors, then multiply by 4 to get the total square footage, right, of each floor. So since the building is 2 stories, we multiply the square footage of one floor by 2. So 24 by 30 is 720. 720 times 2 is 1440 square feet. A 2-story building measures 24 feet by 30 feet and has 8-foot ceilings. What is the square footage of the building? Right, so get the total square footage. You need to know the square footage of the first floor. First floor is going to be length times width, 24 by 30. And then there's 2, it's a 2-story building, so times 2. And you get the square footage of the entire building because there's 2 floors. Right, if there's 10 floors, right, to get the square footage of the first floor, multiply by 10. Right, so 2-story building measures 24 feet by 30 feet and has 8-foot ceilings. What's the square footage of the building? So take area's length times width, 24 by 30, multiply by 2, and then you get that's 2-story building measurement, and that's the square footage of the building. A property sells for $55,000 with a 6% commission paid to the broker. The salesperson gets paid based on a 2-to-3 ratio split. The salesperson receiving the highest portion of the ratio. The salesperson's share would be what? So what is their commission split? He would get $1,980. 1980. 1980. So, sale price, property, how much did it sell for? It sold for $55,000. It was a 6% commission paid to the broker, right? So all the monies always get paid to the broker. Then the broker splits the commission with their realtor. So commission rate is 6%. So 6% of 55,000, it's about 3,300, right? 6 times 5, about $3,000. 55,000 times 6. Okay, so split ratio, commission split is a 2/3 ratio between the broker and the salesperson. So typically, what I've had in the past, I've always had an 80% to the broker, 20% to the realtor. So I always cut my realtor 20% of whatever, my broker always was always cutting me 80% of the check, and then they got 20%. The salesperson receives the higher portion, so in a 2/3 split, that's 2 out of 5 or 3 out of 5. 3 out of 5 goes to the realtor, 2 out of 5 goes to the broker, so 2 plus 3, that's 5, right? 2 out of 5, 3 out of 5, 2/3 split. So 3/5, 3 out of 5 goes to the realtor. So if you take 3/5 times 3,300, that's 1980. A property sells for 55,000 with a 6% commission paid to the broker. The salesperson gets paid based on a 2/3 ratio split, with the salesperson receiving the highest portion of the ratio. The salesperson's share would be 1980. So first, right away, what you do is you calculate the total commission, right? Total commission is 6% of 55,000. Right, you get a number, and then you multiply it by 3/5 to get the realtor's commission portion. So 55,000 times 6% is that 3,300 times the 3/5 portion of the 2/3 split. 2 to 3 split, 1980. Property sells for $55,000 with 6% commission paid to the broker. The salesperson gets paid based on a 2 to 3 ratio split, with the salesperson receiving the higher portion of the ratio. Salesperson's share would be. So right away, to do this problem, take 55,000 times 6% commission paid to the broker. Right, you get the total commission, and then you multiply by 3/5 to get the portion the realtor would get. Salesperson, realtor, real estate agent. 3 names that mean the same thing. A home sells for $405,000 but was listed for $435,000, and the buyers are getting a 90% loan. The sellers are paying a 6% commission, and the buyers want the sellers to pay 2 discount points. So right away, 2 discount points is 2% of the loan. The sellers are paying for a $55 recording fee, $1,735 closing costs, and $253 for title insurance. The sellers originally purchased their home for $250,000, and their loan balance is $183,000. What are the sellers' proceeds from the sale? Bravo, $188,000. $188,000. That's the seller's proceeds. $188,000. $188,000. All right, so the home sold for $405,000. The seller's paying a 6% commission. So first, you take what the sale price was, multiply it by the commission. So $405,000 times 6%, that's $24,300. The buyer's discount points. So what is that? That's 2% of the sale price or of the loan, what it sold for, or the loan. So $405,000 times 2%, that's going to be $8,100. Recording fee, closing costs, title insurance, loan payout, those are all the fees, right? Yes, you add up all those total deductions, the loan payoff, right? How much do they still owe on the property? What's the title? What's the closing? What's the recording fee? Those are the origination costs. Call it PITI, right? Principal, interest, title, and insurance. Total deductions. So you add up all those total deductions: $24,000, $8,000, $55, $1,700, $253, and the loan payoff, $183,000, brings you to $217,000. So they sold it for $405. You subtract the $217, and that's what they net. Right? You capture with the net, $187,000. So you just round up to the closest answer, $188,000. So a home sells for $405,000, but was listed for $435,000. So right away, nobody cares about what it was listed. It matters what it sold for. So that's the number you do the problem with. And the buyer's getting a 90% loan. Again, that number doesn't matter. The sellers are paying a 6% commission, and the buyers want the sellers to pay 2 discount points. The sellers are paying for a $55 recording fee, $1,735 in closing costs, and $253 for title insurance. The sellers originally purchased their home for $250,000, and their loan balance is $183,000. What are the sellers' proceeds from the sale? So right away, you get the total commission cost that the seller has to pay. 405,000 times 6%. And you add up all the other costs. $55, $1,735, $253, the loan payoff. They originally purchased their home for $250. Doesn't matter. They tell you what the loan payoff is. So you add those numbers up, and then you subtract from what it's sold for, and you get the net proceed. So total deductions minus net proceeds, 405 minus 217 gets you 187. A home sells for 405,000 but was listed for 435, and the buyers are getting 90% loan. The sellers are paying a 6% commission, and the buyers want the sellers to pay 2 discount points. The sellers are paying $55 recording fee, $1,735 in closing costs, and $253 for title insurance. Sellers originally purchased their home for $250. Loan balance is $183. What are the sellers' proceeds from the sale? So again, there's like 3-4 numbers in here that don't matter. The $435, the 90%, the $250,000 purchase, the 2 discount points, those don't matter. So take whatever it sold for minus all the fees, and that's the net proceeds from the sale. Oh, sorry. The discount points do matter, right? 2% of the 405,000. Yeah, that's involved in total deduction. Which of the following dimensions contain the largest area? So, township. What's the area of a township? 6 by 6 square miles. That's 36 square miles. 10% of a township is 3.6 square miles. That's the area. 2 sections. That's 2 miles. Each section is a mile. So 2 miles, 2 sections. So you got 3.62, 2 square miles. So 2 times 2 is 4, right? 2 square, 2 miles square. So you got 3.62 and now 4. 1,400 acres. In one section is 640 acres. 1,400. 640 divided by 1,400. Or 1,400 acres divided by the total, which is 640. Is about 2 acres ish. So you got 3.62, 4, and 2. So the largest one is Charlie, 2 miles square. 2 miles square. 2 miles square. Now, if it just said township, that's 36 miles. That's the biggest one. But it's at 10% of 36 miles. So 10% of 36 is, you just move the decimal one time to the left, 3.6. So again, township is 3.6, 10% of that, right? A township is 6 miles by 6 miles square, and it's broken up in little tiny sections. Each section is 1 square mile, which is 640 acres. The sections, right? One section is 1 square mile. One section is 1 square mile, and 2 sections is 2 square miles. Okay, 2 miles square. So, 2 miles square means an area of 2 miles by 2 miles. So, 2 miles square is 4 square miles. And then 1,400 acres. 1 square mile is 640 acres. So, take 1,400 divided by 640 acres to get it in square miles. So 1,400 miles divided by 640. 1,400 acres divided by 640 acres, which is in 1 mile, to give you miles. So that's 2.1 miles. So which of the following dimensions contains the largest area? So again, you just calculate the area of each one. So 3.6, 2, 4, and 2. So C is 4. It's the biggest area. A loan of $28,000 is made at 10% interest for 15 months. What is the total amount owed when the loan is due? 31,500. 31,500. 31,500. So step one, convert time to years. Since interest is calculated annually, right? Interest is interest calculated monthly? No, it's calculated annually. So you convert 15 months to years. So 15 divided by 12, that's 1.25 years. So we know PITI, principal, interest, taxes, insurance, but that's it doesn't really apply here. We're just calculating simple interest. Simple interest is the principal times the interest rate times the time. In simple interest, or interest, is the principal times the rate times the time. Interest is principal times the rate times the time. Interest is principal times the rate times the time. So what's the principal? 20,000. What's the rate? 10%. What's the time? 1.25 years. Plug in the numbers, you get $3,500. So the principal was 20,000 plus the interest is 3,500. You get $31,500. $31,500. So a loan of 28,000 is made at 10% interest for 15 months. What's the total amount owed when the loan is due? So total amount when the loan is due is going to be your principal plus your interest, right? So the big thing here is calculate the total interest. So interest is 10%. That's the interest, but for 15 months. So 15 months divided by 12 to put it in years, it's 1.25 years. Now interest is going to be the principal, 28,000 times 10% times 1.25 years. That gets you a number. That's about 3,100. And you add that to the principal of 20,000. Oh, so that's 3,500 actually. So 20,000 plus 3,500 gets you $31,500. A loan if $28,000 is made at 10% interest for 15 months. What is the total amount owed when the loan is due? So again, you need the principal and you add the interest. And interest is the simple interest. So take 28,000 times 10% times the duration, the length of time. So 15 months, but you got to put it in years. So 15 months divided by 12 months per year, 1 year. So months divided by months per year leaves you in years. So take the total interest, 20,000 times 10% times 1.25 years gives you a total, gives you a number. You add that back to 28,000 and you get $31,500. And that's the total amount owed when the loan comes due.